All right. How's it going, everyone? Welcome to another episode of Forward Thinking Founders, where we talk to founders about their companies, their visions for the future, and how the two collide. Today, I'm very excited to be talking to Thomas Stewart, who's a co-founder of Quantbase. Welcome to the show. How's it going?
Yeah, thanks so much for having me. I'm doing great. How are you?
Awesome to hear. I'm doing well. Loving weather these times of this time of the year, which is nice. I got like a garage door in front of me that I might open up in a couple of hours, and all is good. And I'm just excited to be on this podcast with you to learn more about Quantbase. For people that haven't heard of your company, what is Quantbase? What are you working on?
Yeah, so you could really think of us like a Fidelity account or a Vanguard account, but specifically for aggressive investing. And so that means much like a Fidelity account, you sign up, you create your brokerage account, you connect your bank account or other brokerage account to fund your account on Quantbase. And then we have about 15 different strategies that you can invest in, covering quantitative strategies, alternative assets like crypto, fine art, wine, and more, social media sentiment, and more, all in long-term passive portfolios. We're SEC registered as an asset manager, as an investment advisor. And yeah, that's us.
So walk me through a little bit of how this works. If I was to sign up, what would my experience be like? And I guess in addition to that, what is aggressive? Like, what do you mean by aggressive trading? Can you kind of identify what aggressive style is? What is a non-aggressive style, just so we can compare and contrast?
Yeah, so we tend to compare ourselves to think like a total market index fund. We would suggest you keep 80% or more of your money, depending on your age and financial situation, in index funds. They have a long track record of solid returns, and you can really depend on those. But we also recommend, and this is increasingly recommended as the macro environment shifts over these next few decades, even, that you have some allocation to more aggressive strategies. And that means taking on a little more risk, a little more volatility. And the idea is you take on more short-term fluctuations in your market value for longer, greater absolute returns. So you make a lot more money over the long term. You just have to stomach some more short-term volatility. And as far as what the experience is, so our website's getquantbase.com. You would go there. Like I said, it's a lot like a regular brokerage account. We have a few questions about just mandatory, what's known as know your customer questions about your background, your name, your address, all these things to verify, that you are who you say you are when you're making a brokerage account. You then connect your bank account. And during this whole process, we also ask questions about your financial situation, your goals, what you're looking to get out of Quantbase, to construct a recommended portfolio for you to start with. So when you make your first deposit, you'll be allocated across this initial portfolio. And then from there, you have a dashboard. You can see your performance. You can set up auto investment. You can go between different strategies we offer, and we're offering new ones pretty much every week. And yeah.
Walk me through a little bit about the origin of story here. How did you kind of get started with Quantbase?
Yeah, so I had actually been developing my own investing strategies, coding them myself, testing them, for about half a decade before I started working on Quantbase. And the kind of inflection point was I posted some of my strategies on Hacker News and Reddit, and they immediately shot to the top. They shot up on Hacker News, and I was getting hundreds of people, thousands of people flowing to the website that I had made to host my strategies. And I was like, okay, this is interesting. A lot more people are excited about this than I thought. And this was right around 2020, early 2021, when, of course, GameStop was a big thing, and Bitcoin was exploding, and NFTs, and there was like this massive excitement around taking on more risk with your investing, but doing so intelligently. And so shortly after that, I met my co-founder Sam. We went to school together. He has worked in hedge funds for years. He actually had been using many similar strategies in a portfolio he managed of several $1 million. So it's just, we clicked, started working together from there. And Alan, who became our CTO, was actually one of our earliest users. And so he reached out. He said, like, this is sick. He had been a tech lead at Google and at Chime. And at the time, we were like, we're not sure we need the tech help right now, but let's keep it in mind. And soon after that, we reached out again, we met up, and it just started working together, and it was just history from there. So.
I love that. Timing it is always a funny thing, and once everything clicks, it's exciting to see where things go. And I'm curious for you, now that things are clicking and you're up and rolling, where do you see things going with Quantbase? I mean, if you were to look out 5, 10 years into the future, what do you see as the big vision here, or in a decade? What's the world going to look like with Quantbase leading the pack?
Yeah. So we see aggressive investing becoming a more significant part of basic financial education of everyone's portfolio. And think just like Fidelity, you can go on there and you can search up 1,000 ETFs. Every mutual fund, every ETF that's out there is listed on Fidelity. And in the same way, we want to be able to offer that diversity of aggressive investing strategies covering an NFT index fund or a fine art index fund, covering all these different new assets coming out and turning them into simple, long-term passive strategies you can get exposure to in your IRA, in your 401k through a job, and just in a taxable brokerage account that you can benefit for the long term. So we see this becoming a standard part of every regular investor's portfolio, to really make sure they get the most gains from their portfolio in the long term.
And in order to make that happen, you'll need some help, right? I mean, it takes a village to make a startup work and scale. So my question for you is, how can the forward-thinking founders community help? Are you hiring, raising, looking for partners, customers? How can we assist?
Yeah. So we just got into Y Combinator these last few weeks. So we're going to be raising early next year. But so that's definitely a significant. Definitely reach out, Thomas at Get Quantbase, if you're interested. But at the same time, also try out Quantbase. We'd love to hear feedback. What everybody thinks. Feel free to send me an email anytime. We also have feedback through your dashboard you can give. And yeah, I'd love to know what people think. So.
And then for my last question, if someone wanted to learn more or dive in to what you've built, where can they find you online? Just one more time. What's the website? Are you on social, email addresses, just to make sure people know where to reach out if they want to learn more?
Yeah, so getquantbase.com is the main website. That's where you can go to sign up, see all our information and everything. But also, if you have any questions, you can also find me on LinkedIn, just Thomas Stewart on LinkedIn, or shoot me an email at thomas@getquantbase. Always happy. Yeah.
All right. Well, thank you so much for coming on to the podcast. I really appreciate it.
Yeah, thank you so much. Appreciate it too.